Welcome to today's episode of Blockrevision, and in today's trivia section I will tell you about BYND, that is Beyond Meat, that I've presented on Blockrevision channel about 1 month ago. So if you haven't watched, I highly recommend. There was a fundamental and also a technical analysis of this company. So what's about Beyond Meat right now? So Beyond Meat is a company that is headquartered in USA, and by many is called a Tesla of food, of modern food. So there are lots of assumptions regarding on what Beyond Meat is going to deliver on the market. There are lots of promises, lot of growth potential, but the financial statements doesn't really mirror it right now. First, let's talk about Beyond Meat fundamentals. Right now, in order to just introduce you into the topic of whether to invest or not to invest, or whether to trade or not. So, Beyond Meat recently was this company that has boasted itself with a cooperation with McDonald's. Beyond Meat is also the company that trying to be one of those companies that are identified with a modern type of looking at food, with delivering lots of food that is based on veggies and based on meat that is based on veggies, that's produced by natural components rather than using animal stuff. So it looks like Beyond Meat is trying to get the market with very noisy slogans. They're trying to level up the company's logo in investors' eyes. But right now, there's not very much beyond very catchy marketing noise, as we can find as financials of its stock are really poor right now. We can find that equity to asset is versus industry worse than over 90% of companies in consumer packaged goods, and debt to equity is also something that may also be found as really worrisome. Also, cash to debt is in a historical very low level, as we would see in a moment on the interactive chart. Operating margin is very low, net margin as well. So there are lots of things that impacting the image of a company as to be not maybe not sustainable. So with such high such low net margins and such indicators as return on equity and return on assets, that's something that where the company might have bigger struggles in the months to come. We can also find that Piotrowski F score that appoints the financial condition of a company is at the very low level. However, Altman Z score showing us that the condition is still safe, but really the attractiveness of the model of the business of this company is not at the positive level. So let's look at the interactive chart right now, and we can find that free cash flow per share is really going downside. But optimistic things are that revenue that is marked by this line, and also gross profit is increasing quarterly. So there are some optimistic signs, as also earnings per share, even after plunging in the 2020. Right now we can find that is a little bit inclining. So free cash flow that is at the very low level may point us that this company might have problems in the months to come in sustaining such growth that is right now. And beyond this, the company is probably heading higher, but the uncertainty among this exactly one ratings is something that may bother investors. So let's look right now at some projections in the months to come for this company. So Beyond Meat by analysts is found to be traded at around average of 108.5, and right now we are right at below that level, but not very much lower from there. So right now the very important thing is that whether Beyond Meat may really get above this supply zone once again. So with such company that is missing the earnings target quarter by quarter, we can find that the outcome of such expectations in the end will have a very negative turnover that will probably find that analysts will probably bet against Beyond Meat, that will maybe converge with a slump of the price of a stock. So right now, very important for us to verify is this level where we are sitting at right now. This very important psychologically level, $100, has been tested right here, and we are forming something that may be called a double bottom. So a double bottom is a formation where we are just getting a possibly pivotal turn from second bounce where the price has reacted to the level very convincingly. With Beyond Meat right now, I would find that with RSI that is still maintaining above 30 level, or at least 29.5, I would find that the company to test again this exactly supply zone from the bottom. So Beyond Meat is expected to get to at least $115, and it's 15% higher from here. But if we just will find that any of the daily candle where we are on the chart right now with a time frame of one day, if the daily candle will close significantly below $100 level, I wouldn't bet any single cent for Beyond Meat to go upwards. So right now it's very important moment for Beyond Meat in order to decide whether it's going to the north or whether it's going to the south. So possibly if we just break below this very important level, we'll head straight to the $88 area where this level has been tested a bit at least twice. So I would found Beyond Meat as a company that should get higher, as it's a growth stock and still has a potential to go up as other companies with such financials, but with poor financials, but quite hyped stocks, as there is a hype, really like meme stocks mania going around. So with this one, I would find Beyond Meat to go at least to $115 or even higher if you believe that Beyond Meat may sustain such growth in the future. Also very optimistic might be that earnings per share for next year is appointing 63%, and sales quarter over quarter, so quarterly revenue growth is higher than 20%. That is an outstanding number. But we are talking right at the next few months. But what will bring another year or two, or even a longer period of time? That's more difficult to say, because the company is very choppy in its performance, and possibly will have some downsides as well. So in terms of trading idea, I would based on a double bottom formation, I would make my bet right at like this, with a risk reward ratio at the level of 3, and the target will be 13.4 with a stop at 4 with a stop of 97 point target will be on the amount of USD will be at 115.4 with a stop loss at 97.5. So entrance area right now will be we have its extension of 4%, and with a lower bottom, with a lower limit of $100, and with a higher limit of 104.12. Remember about risk management, about setting a stop loss, or at least an alarm right at this level, in order to react if the price action will speed up to the negative side. Okay, so that's it for today's episode. Thank you very much for watching. If you have any questions, just put it in the comment section below, and see you in the next episode.